going on, everyone? It's your boy Nathan here with Win with Nathan. Guys, I just want to shoot a quick video about DSCR. I got all my notes here. I'm going to try and do more educational videos a little differently this year. The first one I want to do is just like cover the basics, right, of different loan types. The first one's going to be a DSCR. As you know, I love DSCR loans. I'm an investor myself. I love them. I think they're great for people. So let's just talk about the basics of DSCR. There's 5 things that are very basic that everyone should know about DSCR loans. One is, how does it work? A DSCR loan is basically dependent on your credit, and then you're looking at the income of the property. So if the income projected on the property or actuals or least pay for your mortgage, right, you're pretty much approved. Now, you can go less than 1-to-1. You can go down to 0. I call that a bridge loan for a DSCR. I'm doing one right now for a client. It makes sense for his plan. It's a bridge loan, essentially. You also have people call it a no ratio loan. It's all the same thing, but basically DSCR is looking at what is the estimated rent, and then what's your mortgage payment, right? And then it factors in pricing and LTV and all that stuff. So that's the very basic. Most lenders want a 1.1 or 1.25 or greater. You don't need that. That's a myth. The second biggest thing is, what are the minimum requirements for DSCR loan? Well, first off, you can't be a first-time home buyer, right? There's a lot of mortgage fraud out there. First-time home buyers is very hard to come by. We used to do it at 35% down. We don't anymore just because of all the fraud. So the bare minimum is you must have owned a home for 1 day in the last 3 years, right? Or your spouse needs to, because your spouse is there. You're considered a homeowner as well. The other is, you usually need above 620. You can go as low as 620. Don't recommend it. It's a higher rate, higher down payment. Usually most investors find themselves above 700 credit, and they're purchasing with usually 25% down. You can go as low as 15% down. The other thing you need is the down payment, and you need an appraisal, right? Very simple for a DSCR loan. We can go into more depth about different strategies and all that stuff later. The third thing everyone needs to know is, how is DSCR calculated, right? DSCR stands for debt service coverage ratio. So how do you cover that ratio? So basically what you want to look at is, let's say it's a long-term lease, you make $1,000 a month. Then you want to look at what's your mortgage payment. If your mortgage payment is $1,000, it's a 1-to-1, right? If it's $800 mortgage payment, your rent is $1,000, that's a good debt service, right? That's a greater than 1. Now, if your rent, or excuse me, let's say your mortgage payment's $1,200, your rent's $1,000, that's a below 1, right? So that's going to be more expensive because it's a non-performing debt service coverage ratio loan, which means it's going to be more costly. Let's go and dive deep, because short-term rentals is a big thing, right? Short-term rental loans are my favorite. I love them. I own short-term rentals. I own long-term rentals. Short-term rentals are calculated based upon 4 different ways, but the simplest thing in this video we're going to talk about is how to take the income. Let's say the gross income projected for a year is $100,000, right? We have a 20% expense factor on short-term rental gross income, so you can use $80,000 to calculate your DSCR ratio. Long-term rentals, we do not have an expense factor. We use 100%. That's different than Freddie and Fannie, right? So it's very easy to calculate. And then the fifth thing that everyone needs to know about, which is something that a lot of people forget to ask, is, what are the drawbacks for a DSCR loan, right? Most people out there just don't understand DSCR. They think DSCR is a loan that caused the housing market crash in 2008, right? Everyone calls these type of loans that are non-conforming, they call them the subprime of yesterday, right? I hate all those people on YouTube that do that. They know who they are. The drawback for DSCR is that it's not backed by a government agency, so you are going to have origination, right? We do charge origination. Most brokers charge origination. Most lenders out there do. But that's standard, right? It's not that big of a drawback. The biggest drawback I see for most people is going to be the prepayment penalty. They think that is a huge downfall. I don't think it is, right? Because if you're refinancing every year, you're killing your cash-on-cash return more than likely. But a prepayment penalty basically says, like, how long until the bank recoups this money. So if you have a 5-year prepayment, it means in 5 years you can't prepay, you can't pay it off, you can't refinance unless you pay a penalty, right? No big deal. If you sell the home, hopefully you're getting the penalty included in that. 3 years is what I see typical. 2 years every now and then. It's very rare I see 0 or 1. It's basically depends on the strategy you and I come up with. If it's a great strategy, and I just did one for a lady last month for a 12-month, it makes sense in her situation, right? It's got to make sense. You can do a declining prepay too. It's a drawback for many people because they get scared, But here's the thing. If you're an investor and you know what you're doing and you know a property is going to do well, prepayment means nothing. Now, if you're one of these investors that follows people on TikTok or Facebook or YouTube and got into this and you're like, oh, it's my first investment, or I think it's great, I don't know, and you don't know how to analyze a deal, I can see why it's a drawback, because you're scared because you don't know what you're doing, right? Know what you're doing. All right. Another drawback, which is a myth, is a lot of people think you got to put 30-35% down. You don't, right? We here at the lender, we offer as little as 15% down. All right. Not every lender does that. We do. Another drawback for a lot of people is that not a lot of lenders know what they're doing, and brokers. That's the truth of the matter. Is if you don't know what you're doing, it's very hard. Like, I just had a conversation with an investor. He said the one thing he dislikes about DSCR loans is that you can't get pre-approved. And
what number comes between 2 and 4? Beetlejuice.
25.
Wait a minute, Beetlejuice. I want you to think about it.
Think about it. Don't blurt out your answer. What number comes between 2 and 4?
Start from 1.
21.
Don't confuse him. Let him just give him.
Let me hear his thing.
He's got the answer. Got all confidence.
Run your fingers.
You can use your fingers. I don't care.
36.
And I said, I need to ask right now, who told you that? He told me the lender that told him that. I said, I'm sorry, but that lender is so full of shit. I know you shouldn't curse to a potential client, but that's what I said. Because here's the thing. In 2.5 years, I pre-approved every DSCR loan I've pre-approved. It's gone through, right? I can't control the appraisal, and I can't control the rent survey, and I can't control title. But if you pre-approve up front and you know stuff, you can head off a lot of issues up front. And the biggest issue is probably going to be the rent survey. That you can't control, but what you can do is you can look at comps. And judging by comps, there's a good way around it, right? There's a good feeling. So I told him that I can pre-approve, maybe not anyone else, but I can't. And what we did is I sat there and reverse engineered to show him, hey, he wants to spend $1 million, buy $1 million property. He wants to put X amount down. How do we figure out what he has to have? Well, I asked him for high taxes, high insurance. We got to the mortgage payment he would be at for his structure at $1 million. He wants to be less, but at $1 million. And then we figured out what income he needs to get by at a 1 ratio, right? So now he's going out there, and I told him to tell his agent, go look for properties that meet these qualifications. If it meets all these, check it off, check it off, check it off, check it off, and then the income, check that off. Should be no issue. So when people say you can't get pre-approved on these loans, they don't know jack, right? Go with Win with Nathan. There's a reason why I win, right? You got to take the time, and it's a little more time consuming to find comps and look at all that stuff. But on anything that I can control, I've not had one of those things come back and bite me in the butt in the last 2.5 years. Things that I can't control, I can usually find a workaround. Now, there was a deal in New York where someone thought he knew better than me, and I told him this property doesn't look good. There's no good comps. He insisted he knew what he was doing. Sure enough, rent came back half of what he thought. He couldn't pull any comps to support it. So he ended up withdrawing that loan because it was a terrible purchase. And we told him up front, this is terrible. I even told him, you're probably wasting my time, but you know what? If you want to waste your money, go ahead. He knew more than me, right? So guys, that's just the basics of DSCR. I absolutely love DSCR. I love how they've come around in the last couple of years where everyone's trying to do them now, right? There's a reason we have extended guidelines. We know what we're doing. We're good at what we're doing. We're the best. I would like to compete against anyone out there on how good they are versus us. I wish there's a way to compete in mortgages, I really do. The way they compete is like, oh, how much did you do last year? Hey, Scotsman guy, whatever. I'm sorry, that means jack squat, right? Look at what just happened. Oregon was 13-0, I think, and they got their butts kicked, all right, by a 2-loss team. So, guys, stats like that mean nothing. I take pride in being undefeated where I haven't lost a deal in 2.5 years. Right? I don't know how many other people could say that. And that's all types of loans. That's not just DSCR, it's all types. So guys, that's the basic of DSCR. If you have any questions, please reach out to me, call me. I look forward to hearing from you. I love working with investors. I love just helping them. It's great. As an investor myself, I love it. So guys, until next time, this is Win with Nathan, the coach. Have a good one.